Hey guys, what's going on? I wanted to talk to you today about self-storage profits, right? That's the most exciting part of all this stuff, at least on the surface. And some of it is very self-explanatory, and other parts of this might be kind of eye-opening for some of you, which I think you'll find very pleasantly eye-opening, if that's a thing. Um, so again, this is going to be a bit of a generalization, but I want to talk to you about the three main profit centers that we see. And this is really true of all real estate investing or many types of real estate investing, I should say. And they are cash flow, which basically means each month the revenue that comes in minus all the expenses that you spend in that month is going to leave you with a net profit. And that is usually what people think of first when they think about profits relative to real estate investing, because that's what you're going to use as a real estate investor. Those profits you can use to either reinvest in additional properties or to pay your personal bills, your mortgage, whatever the case may be. Basically, replace your regular income if that's what your goal is. But that's really only one piece of the puzzle, and the other two, while maybe not as evident or mainstream, are just as valuable, and they are equity pay down. So another, essentially, let's say you buy a property that you have debt, that you use a bank loan to buy it, so you have some leverage and some debt payments every month. A portion of your payments, and in the beginning, a large portion of your payments are going to go toward interest, but at least some of it is going to go towards paying off the loan to the bank. And eventually, that loan will be gone if you own the property long enough, and those are also profits, right? Because if you owe $500,000 to the bank this month and next month you owe $498,000, you've made $2,000 that month. Now, it's not spendable cash, so you need to be aware of that, but that can really be a good thing. I look at my equity pay down when I have a loan on property as a forced savings plan. It's almost like a retirement plan. And if you're, in addition to paying down the principal balance, if you're also increasing the value of the property by streamlining operations, increasing revenue, decreasing expenses, any of those things that we can do to add to the to increase the value of a storage property, that's also money that is your profits. It's just not spendable. So what I found to be true, and we can go over some examples. I don't know if I'm going to be able to share my screen with you, but I can use some ballpark. They're not going to be exact numbers off the top of my head, but some examples to illustrate this stuff and hopefully bring it full circle for you. But again, that's that equity pay down or the forced appreciation, where the property is increasing in value or your loan balance is decreasing each month, is an additional area of profits for you. And then the third and probably the most overlooked area of profit is relative to tax savings. As real estate investors, we are the beneficiaries of some favorable tax laws. And I am going to preface this discussion by telling you that I am not an accountant and I am not an attorney and I am not rendering legal advice or financial advice or accounting advice. These are some concepts that I know and that I'm familiar with and I know can be beneficial to real estate investors, but I'm going to leave it up to you to review these things with your hired professionals and act as they suggest you do, not as I'm discussing here. All of that out of the way, very generically speaking, when let's just compare $100,000 a year job. Let's make the math easy on me. An $80,000 a year job versus a self storage facility that generates $80,000 a year in taxable income. I'm sorry, in profits, cash flow, right? So that 80 grand a year that you make at your job is going to be taxed. The traditional way is that your employer is going to pull out a portion of that money to withhold and pay the taxes on your behalf, so you don't have a hefty tax bill come April 15th. Now, there are things you can do to minimize your taxes, contributing to a retirement account, paying for your health benefits with pre-tax money, all those sorts of things. And you can do all of those things with your real estate profits as well. So there's no difference between the two there. Where the differences come in are when my property, my self-storage property, hypothetically makes $80,000 last year. I have a couple things at my that I can utilize to decrease how much taxes I pay. The first actually just came into effect this year. It's a 20% pass through, and we'll talk about that in a moment. The other one I want to mention is depreciation. And so, without getting too far into the weeds here, hypothetically, let's say I have this $80,000 in profits, and the amount of money I have invested into this property, not myself, but just my cost basis, the purchase price plus any improvements I made, let's say is $800,000. Now that can be money you borrowed from a bank or private investors or whatever the case may be. But what the government allows you to do is take a paper loss known as depreciation. And the way you calculate how much you're able to take is you take your basis, that $800,000, and you divide by 39 and a half years. We'll call it 40 years for easy math. Essentially, that means $20,000 you get to put in your tax return. I lost $20,000 this year. Now, you didn't cut a check to anybody for $20,000. You didn't lose $20,000. Most likely, your storage property is going up in value over time. So this is truly a paper loss. It doesn't affect you in any way other than to save you tax money, at least in the short term. Eventually, that will be recaptured when you sell the property. It will be there will be an adjustment put in, so it's not like you never have to pay the taxes. It's just you get to defer them. The best way to think about it, the most sophisticated way to think about it, and not have it come and bite you back in the butt when you sell it 5 years from now and forgot about this, is that it's a interest-free loan from the government that you're free to reinvest and continue to grow your money until you sell the property, and then it's recaptured. But the bottom line is your $80,000 profit just shrunk to $60,000, and that's what the government's going to tax you on, as opposed to the $80,000 from your job, where they're going to tax you on all $80,000. So there's depending on your tax bracket, $5,000 to $8,000 savings, and that's not something to sneeze at least in my eyes. The other thing, and this just went into effect this year with the new tax laws, and it is extremely favorable for business owners and real estate investors, is after we've got down to our bottom taxable number, that $60,000 that we just talked about from as a result of the depreciation, we're going to be able to lop off 20% of that. So in this case, an additional $12,000 as what's called a pass-through deduction, I think is what they call it. So now, this year moving forward, instead of being taxed at the $80,000 like I would if I had earned the money at a job, or the $60,000 like I used to on my storage profits, now I'll be taxed on $48,000. So that's even more savings. Let's say you're in a 25% tax bracket. On that $12,000 decrease in taxable income, it's like putting an extra $3,000 in your pocket, and that one's not recaptured at any point. So these are all very meaningful. I'm going to try something here, and actually, you know what? I don't think it's going to work, so I apologize. But I was going to pull through. I recently sold a storage facility that I had owned since 2011, and I just did some approximate calculations on the cash flow, and you know, the storage investing that I do is not a get-rich-quick scheme, and I don't pretend that it is. So I own that property for 6 years now. I never projected to make a whole lot of money the first year or two, and whenever I buy a property, because of my style of investing, where I'm buying properties that are value add in nature, meaning they don't make a whole lot of money and they're not worth a whole lot until I put my system in place, get them operating, and then they're worth a whole lot more. Because of that, the first 12 to 24 months profits are really, I never count on them. And if there are any, it's icing on the cake and they're really nothing to write home about. So I took a quick look at my property, and that I bought in 2011 and sold just in August of 2018 this year. And I wanted to look over the course of those 6 to 7 years, how the profits played out and what portion came from each of these three profit centers that we talked about. And early on, it made like $20,000 in cash flow the first year, closer to $40,000 the second year, $55,000 the third, and then it kept climbing where it did top out between $80,000 and $90,000 in the last year that I owned it, and I averaged those numbers to get an average cash flow per year, and it came out to about $56,000, $57,000 somewhere in there. So just to give you a ballpark, per year owning that property, call it $55,000 a year. As far as the equity pay down and the appreciation, that second profit center we talked about, I bought the property for $360,000, spent some money while I owned it, about $400,000, and I have to backtrack, mixing up my properties. I bought that property for $330,000. I had about $20,000 in closing costs, so I was all in for $350,000 at the time of purchase, and then I put like $400,000-ish into expansion, adding additional buildings, extending fence lines, gravel parking lot, all that good stuff. So I was into it for about $750,000 to $800,000, and again, last month I sold it for $1.8 million. So that's $1 million in profits from that particular profit center. So though we all tend to think about cash flow as the primary profit center, over the 6-7 years that I owned this place, I made $350,000, $400-ish thousand in cash flow, which is certainly good money, and it was enough to pay my bills, my personal bills that whole time, which is great. And it's a good thing because the equity that I made was not spendable. I could have pulled it out through refinances, and I did occasionally. I actually paid off my old house with one of my refinances, and so those side benefits are in there. Now you got to make sure that as you're doing these more complicated, sophisticated things, that you're keeping the books properly, so that you're staying on the right side of the IRS and all that good stuff. But I made way more money in equity when I sold the property than I did in the cash flow, even though that's kind of the secondary profit center. And then from a taxation standpoint, every year when I took that, let's call it $55,000 in cash flow home, I was depreciating the property. So instead of paying taxes on $55,000, I was paying taxes on, maybe $40,000. And those all added up. Now, when I went and sold the property more recently, I got a big kick in the head from the tax man saying, "You owe us a boatload of money now," which was to be expected. And I, because I had the foresight to know that was coming, it wasn't a big shock to me. And of that $1 million, I had to put a quarter of it away and pay capital gains tax and state income tax and all that good stuff. So even so, having that money, that tax money savings for the last 7 years, allowed me to reinvest in other projects and improve my cash flow situation throughout my whole ownership of the property. So hopefully that makes sense. Again, those are rough numbers, not anything to quote me on per se, and definitely talk to your tax advisors and tax attorneys and all that before you do anything on your own. But I wanted you to have an idea of how much wealth can be created using self-storage. I'm trying to think off the top of my head whether or not there's anything else I wanted to share relative to this, but I think that pretty well covered it. If you guys have any questions, please comment below. I'm happy to answer them. And if you like this video or you want to hear more about self-storage, certainly subscribe to the YouTube channel, and we will be putting more stuff out on a relatively regular basis. So we hope to see more of you. Thanks, guys. Have a great one.